So hello and welcome to episode 2 of the Let's Talk Mortgages podcast, brought to you by Green Mortgage and Protection. This week again we've got Sam from Blink Video joining us for a chat again about mortgages.
Thanks for having me.
Well, thanks for having me in your studio. So for anyone that can't see, we have got Sam's dog Bodger in the room with us as well. So
So hearing strange noises. It might not be me and you.
Yeah, it's not our stomachs gargling. It's it's Bodger pottering about. So this week we've made it to episode 2. We enjoyed it so much the first time around, we thought we'd do it again. And then this week we're going to be talking about our favourite client type, which is first-time buyers. For us, it's kind of where we add the most value to people, because you're taking somebody from never bought a house before to getting themselves on the ladder. So there's a lot of questions. It's quite a daunting process for them. So it's definitely a client we like helping. Obviously both me and you were first-time buyers at one point.
And that first-time buyer journey, you was involved with it from our end. So yeah, it's kind of good that I'm here, because like that, with that experience, I was that customer at one point. So
yeah, I mean, we bought our first house in 2014. Didn't really get much help from the person that was doing our mortgage for us. They didn't really signpost what to look out for, what the next steps were. We just kept getting an email saying, you owe this, you owe that. This has
do you look
happened.
back at that now then and think, God, that could have been so different. Like, why wasn't it? I mean, I guess that kind of inspires you to do a bit better, really.
Yeah, it was mental, really. I mean, we bought a house through an estate agent. We were so unprepared. It was like, I want to buy this house. Great, you need to go speak to this mortgage advisor. So you kind of get like ushered into the room with the mortgage lady. And I mean, it was 10 years ago, so I probably don't remember it too clearly. But what I do remember is it was kind of like, it just felt like one thing after another. It's like email, oh, you've got this now. You got to pay this. Can you do this for us? And I was like, I didn't know we had to do half this stuff when we bought the house. I think kind of looking back, you kind of reflect on that and think, do you know what? If I was in that situation again, what would I want somebody to tell me? Which is, this is how the process works. Kind of sit yourself down. We're going to educate you. This is what happens. This is what to expect. These are things to look out for. It happens in this order. Yeah. So when you get an update from us, you kind of know what that next one is.
Yeah. So I guess like what's the current state of the market now? You know, first-time buyers potentially listening to this podcast now. You know, as of day of recording, you know, what's the market like right now?
Yeah. So at the time of recording, we're in June 2024. I mean, for first-time buyers now, the average age is creeping up. It is becoming more and more difficult for people to get on the ladder. Yeah. So the average first-time buyer now is age 34. Their typical average first-time property that they buy is valued around 236. Bear in mind, we're recording this in Hull, where our average house price is a lot lower than the rest of the country, so that does factor in areas like London and things like that. Yeah. But a lot more first-time buyers are getting support from the bank of mum and dad, because it's so difficult to get a deposit together when you're trying to cover the cost of everything else. Some people might be renting, so your money's going there. More people are leaning on support from mum and dad, and now a lot of lenders are taking longer mortgages to make that more affordable. So the average mortgage term now is 32 years.
Is that like slowly been increasing then? Is that probably projected to go further as well, or?
Yeah, I mean, we're seeing more and more clients now take longer term mortgages, because interest rates have gone up, cost of living everywhere else has gone up. So it's like, well, yeah, if we can add a few more years onto the mortgage, that's going to free up a little bit more cash for us each month. Yeah. So yeah, we're seeing more and more clients now taking 35 and 40-year mortgages, which like pre-COVID, like very few lenders were offering a 40-year term. A lot of lenders now, like, the rule was this has to be repaid by the time you're 70. Yeah. A lot of lenders now are saying, well, depending on what you do for a living, if it's an office job, you can go to 75, because, well, good old Rishi's pushing state pension age up, so that could be a reality. Yeah. But
everything else gets knocked up as well, yeah.
Yeah, and some lenders are even going to age 80. Don't bear thinking about still paying a mortgage when you're in your 70s, but that is an option if you need it.
Oh, and yeah, I guess no matter what, it's hard buying first time, right? Because I guess if you've not been through the experience before, it can be quite daunting. We've already touched on that a little bit, but it's hard.
It is hard, and I mean, it's only getting harder as well. Like, you see, house price growth is still outstripping wage increases because we live on a small island. The population's only getting bigger. Divorce rates are up, so people are living on their own. And we're not building enough houses, so that problem keeps increasing, but the demand is still there. But yeah, like with obviously the cost of living as well is your costs are going up everywhere else. So how do you put that little bit of money away to get your deposit? That is the biggest difficulty at the moment.
Yeah. So what are some of like the biggest obstacles then that a first time buyer frequently sees? Like, what do you see quite frequently?
So for us, it is that deposit. People tend to only get in touch when they've got a decent amount of income. So we do a lot of mortgages for rugby players. I can tell when they've got a new contract because that's when they get in touch. So in rugby, your contracts run December to December.
Yeah.
So usually May, June time, I get an influx of phone calls from rugby players.
Right, yeah.
Just signed a new contract either at the club that they're in now or they're moving somewhere else and they need to do something about it. Yeah. So usually people that have just qualified, just secured a new job or a pay rise or something, that kind of prompts them to get in touch. So income's never usually the issue. People tend to have decent credit scores and things like that. It's the deposit that kind of holds people back because, like we were saying, you've got all these other things to pay for. How do you free up that cash to put away? Deposit is the biggest barrier for most first-time buyers.
So I imagine as well, first-time buyers are looking to just have the bills as cheap as they can, obviously with cost of living and whatnot. Would you advise to take a longer mortgage? Obviously, you've just mentioned these rates can go to like 40 years now, which I didn't know that myself. It's
quite frightening, isn't
like
it?
Double,
really,
I think, for the years that we've got locked in for. But yeah, is that something you recommend? Is it something to consider? Would you stay away from that? What's the advice?
So we would always advise taking a mortgage over the shortest period you can comfortably do it.
Yeah.
So comfortably is, are you happy to allocate that amount of money? Couple of questions we always ask people is, because people sit down with us like, oh, what should I pay?
Yeah.
Well, that's not for me to decide. It's
subjective, really.
Yeah, what I'm happy to put aside for a mortgage each month will be completely different to what you would and the next person. So it's got to be what's right for you. Like your mortgage needs to be as unique as you are. So it's as short as possible because the longer you take a mortgage, the more interest you're going to pay. So not only are you going to minimise the interest, but then it's also going to be out of your hair sooner as well. So you're going to be free of that mortgage. So
you've got like an example of that then. So like in terms of like that range, what typically price difference would you see? What kind of save? Because that's the saving really, isn't it? What's the saving amounts you can get there?
Yeah, because I think people get drawn in by monthly payment. It's like, I'm only paying £500 a month, but you've took a 40-year mortgage. So we actually did like a bit of an experiment the other day, and we looked at if you took a mortgage, for 20 years with an interest rate of 6% compared to a mortgage of 4.5% over 35 years, you'd assume, well, the one with the lower interest rate, that's got to be way cheaper for me, right? Well, the one with the 4.5% rate over 35 years actually cost you $5,000 more in interest because you've dragged it out for so long. Yeah. So although the 6% rate over 20 years, you think, well, 6%, 4.5%, that's got to be more expensive. Because you've condensed it and you've paid it off quicker, it was actually $5,000 cheaper over the life of that mortgage. So shorter is always better. But that's kind of where when you come to remortgage, because your life changes all the time, is when you come up for renewal, your job might have changed, you might have had a child, somebody's on maternity, that sort of thing. So you can always amend your mortgage to reflect like your life situation. So even if you do start at 40 years, you might not go 40 years. Yeah. You might get a pay rise, somebody might move in with you, rates might improve. So it's constantly changing. So we recommend to most people fixed rate mortgages because then you can budget. It does exactly what it says on the tin. Yeah. So your rate's not going to change. So people fix in for like 2, 3 or 5 years. So you might have a 30-year mortgage. Just break it down into 2, 3 and 5 year chunks because that's not going to change. That's fixed. Review your circumstances when that ends because there might be a life event, and just keep chipping away at it like that. But yeah, kind of like back on on the biggest obstacle is the deposit. So we get asked all the time, like, oh, I really want to buy a house. How can I get there? And there's no real like sexy way of getting there. It is literally just saving. But there are a few things that you can do that we recommend. So the first one, which is kind of like the magic pill, is open up a lifetime ISA.
Yeah.
It's what used to be the Help to Buy ISA that finished and got replaced with the Lifetime ISA. Basically, with that, you can save $4,000 a year. So, best way to describe it is if you've got two people, so you've got a young couple that are wanting to buy, both open up a Lifetime ISA. If you saved just short of £77 a week, which might be easier for some people than others, by the end of the year, you're going to have £4,000 each in your Lifetime ISA. £4,000 then becomes £5,000 because you've done that each. You've saved £10,000 in the first year. That'd be enough to buy a £200,000 house with a 5% deposit. So it doesn't sound like a lot, but when you get there, the difference it can make, and I mean, you're not going to get 25% from anywhere else. And especially from the government, when was the last time they ever give us anything? So if they're going to give you 25%, grab it with both hands. So we said to people, open up the Lifetime ISA because that's where you're going to get the biggest return. If you're fortunate enough to be able to save more than that, then you've got another ISA that you can put that in. That would be the one biggest bit of advice I would give to first-time buyers: open up that Lifetime ISA. Other things you can do there is kind of keep like a savings log. I think if people, when they see how far they've come, like a bit like a weight loss goal, you see how far you've come, it kind of spurs you on to go a little bit further. And you realise, you know what, I'm actually not that far from where I need to be. It eggs you on a little bit.
Do you recommend like some of the banking apps for that? Because I know they've got good tools now, which kind of like round up pots and like shared bank accounts, like things like that. Is that something that you kind of push clients to consider as well?
Yeah, I think they're great because it takes you out of it. It makes saving automatic. So it's like, you think 30, 40p here and there, like you're not going to miss it. But at the end of the month, that could be like 20, 30, 50 quid. So they're great. And another thing as well is whenever it comes to saving is to automate it, because you might not feel like saving every month. Summer comes around, you want to go to a beer garden, you've got a holiday coming up, it's like, oh, I'll spend it on that. So we always say, like, pay yourself first. So if you get paid on the very last day of the month, set a direct debit on the first of the month. So as soon as your wages land, that money goes into your ISA. You don't miss it, because if you save what's left at the end of the month, you're never going to do it. Whereas if you save first, make it a priority, do it by direct debit, so you don't have to think about it. And then if you can use those, the Roundup apps, the Money Box, things like that, again, it takes you out of it. It saves it without you thinking about it.
I've used a couple of banking apps, and that's they're simple in it, but that's the kind of tactic I've gone with, is on the day I get paid, put some money into a savings pot, done. Save it that way. So
take the emotion out of it. Like let that do it for you.
So what's like some of the first steps then a first time buyer should take? I mean, obviously, I guess that's kind of step one, but once they've got that kind of deposit saved, where do they go? What's those first steps?
I would always recommend speaking to an advisor. Buying a house is one of those things you don't know what you don't know. A lot of people that we speak to are like, oh, we want to buy a house, but we don't think we're ready. And I was like, how do you know? And then we have a chat with them, and it's like, okay, so you've got this much deposit, you earn this much. I was like, and what you aiming for? Like, we kind of work backwards from what you want to aim for. So if somebody says, oh, well, yeah, I think we want a 3-bedroom house, we think it's going to be 200,000. It's like, okay, so what deposit have you got? All right, you got 20,000, so you got your 10%. What's your income? Oh, well, I've just got this new job on this. Well, that's enough to cover it. You can pretty much go now if you want. So I would always recommend speaking to somebody. At the end of the day, it's free to speak to an advisor. But any advisor that wants to charge for their time before they've even done anything for you, I'd probably run a mile. Speak to somebody that's not going to charge you for an initial consultation, like us. And just have that chat and just say, look, this is where I'm at. What can I do? We would always say to people, based on where you are now, this is achievable. What you want to do, you need to do X, Y, and Z to get there. So it might be you need to save a little bit more. It might be, I know you've got this promotion coming, but until you've got it in writing, we can't use it. So let's wait until you get that. So best case scenario, you can get something today. Worst case scenario is, well, you get a bit of a roadmap and some homework to get you there. So speak to an advisor. With the deposit, if you've not already, open up your Lifetime ISA, because if you're 12 months away, get that open and you can get your 25% bonus. And then get your mortgage in principle before you do anything. We get a lot of people, there's usually two ways people come to us. One is they fall in love with a house, they put an offer in, and then we have to work backwards to see if they can get it.
And you sometimes get disappointment there, which
yeah, you feel like you're crushing someone's
isn't
dreams.
fun. Yeah,
I was like, I know you're falling in love with this £1 million house, but
I'm telling you, you can't have it.
unfortunately, no, it's not going to happen. Yeah. So yeah, people either come to us because they found something in particular, and we work towards that, or what we would recommend, which is what most people do if we can speak to them early on, is let's find out what's doable before you then go out and start looking at stuff. So we will sit down with people and say, look, based on where you're at now, this would be your budget, because budget might be what you can afford on paper, or it might be what you're willing to spend each month. A lender might say, yeah, you can borrow all this, but the monthly payment's going to be double what you want to spend. Then we kind of make some changes. So we can map out to people, this is what you're looking at, this is your price range. And then that makes life easier for people looking then, because well, if you know you can only buy something at 200,000 and below, what's the point in looking at £300,000 properties, because it's not going to happen. So that kind of narrows your search down a little bit as well.
And then are you able to then kind of advise on the costs on from that? So what other costs would a first-time buyer expect that they might not expect?
Yeah, so you always want to have more put away than what you think you need. At the end of the day, you're gonna pay for your broker. There's going to be legal fees. With the legal fees as well, that's kind of split over 2 payments. So when you come to buy a house, you need to get the searches and all the legal documents for the property as well, because they have to send off for them at a cost. They usually charge you a few £100 up front to get that ball rolling, because it's going to take a few weeks for them to come back, so they do that early. But then you have to pay that on the rest of the bill on completion. There's going to be survey costs, despite what condition the property might be in. If you want peace of mind and you've got the money to do it, we would always recommend getting a survey done. Yes, the lender's going to value the house, but that's all they're going to do. They're going to value it. They'll tell you what it's worth, nothing more, nothing less. But if you've got any concerns over the property, whether it be a slight movement, it hasn't been touched in a while, then yeah, get that survey done. So that's going to be a cost. Normally, when you buy your first house, you kind of move yourself because you don't have as much furniture and
unless I guess if you come from a renting place, you might need removal as well. So
yeah, I'd always recommend a removal company if you can. We used one. We used Appleyards last year, and it was the best money I've ever spent. Moving was actually fun. We actually, if anything, we got in their way. All we had to say was like, "Yeah, want that in that room," and they did everything, and felt like a bit of a spare part, really. I think I did like the sandwich and coffee run at one point just to give myself something to do.
Book a holiday away next time, like so you should leave one house.
Here's the keys.
And then just move into the next house.
I'll see what the other end.
We mentioned Appleyards then, but I know you've kind of got a good network of people that you trust and support as well. So I guess for first time buyers as well, going, where do I turn for a solicitor? Where do I go for removals? Where? I guess you've got that advice as well of people that you trust and that can do a good job as well, right?
Yeah, I mean, we don't recommend people that we've never used ourselves. So yeah, Appleyards, but me and you have known Andy for years, and they do amazing work. And moving house is one of the most stressful things you'll ever do. So if you can have somebody there that's going to take some of that stress out of it, you can't really put a price on that. Solicitors, depending on what sort of case it is, because we do lots of different like property finance and stuff, we do have people we refer there. But we tend to let people make their own decisions. I've been on the receiving end when you're trying to buy a house and you're almost like shoehorned into using somebody. And you're almost like, wait, why is that? Like, you came to us for your mortgage advice off your own free will. You should be able to do that with everybody else. So it's got to be like who's right for you. So when it comes to solicitors, we tend to say to people, do you know what? Get a recommendation from somebody, because if you know someone that's had a good service, you'd like to think the same is going to happen for you as well. And just like any other business and any other service is, they're all going to charge something different, and some are better than others. So we just said, you know what, ring around a few, get a quote, and kind of get a feel for what they're like on the phone as well. If they kind of fob you off a little bit, or they don't seem overly helpful, or they take forever to come back to you, that's sometimes an indication of what you can expect from the service. And what we say to people as well is cheaper is not always better as well. We get people ring up, say, I've been recommended so-and-so, like in London somewhere, like a real sketchy firm that you've never heard of before, but they're going to do it for half the cost of everybody else. And it's like, there's probably a reason for that.
And they go all the way back around and end up coming back to you, which is great, but you just think, I could have saved a bit of time. And I guess that's that first thing, innit? So would you say the first step really is to get in touch with yourself and And,
Yeah, I'd like to think people were going to come to us after listening to
well,
this.
that's what we're going to say. We're not going to say get in touch with anyone else. Although there are others out there. I know you're not a pressured. You don't pressure people as well, do you? You're there as a service. You're there to help and support people. I know obviously you've got like the ebook as well, which I've got in front of us here today, the brochure, which I think is a really helpful guide as well. If you want to mention something about that, which I think is great for first time buyers.
Yeah, so this actually started off as the digital copy. So we've got the first time buyers guide. So basically through here is the 12 steps you need to go through, to buy your first house.
Yeah.
And we made this, show a picture. We made this because we were trying to kind of swim upstream and find people before they think they're ready.
Yeah.
Like I was saying earlier, is we get a lot of people that, am I in the right position? Am I not? Going through this, you'll know by the end of it whether you're in the right position or not, or it'll help improve the position you're in at the moment. So with this, based on the lifetime ISA that we mentioned as well, is your lifetime ISA, you've got to have it for 12 months before you get the bonus. So this is aimed at people that are about a year away from buying their house. So through this, there's all the information that you'll need to know. We've touched on it briefly, but this is more in depth. And you can kind of like tick off the milestones in here as you go through it.
Yeah.
But then there's also some like workbooks in the back, like we were saying about the saving, about tracking your savings and seeing how far you've come and stuff. Is we've got one in here somewhere, so you can like tick off like how much money you've put away and how far away you are, like a jargon buster and stuff. So we give that away for free. So if people want the hard copy, if they just get in touch, drop us an email or a message, we can get one posted out. Or if you prefer the digital copy, we can get that emailed out. But yeah, just trying to get that out to as many people as possible. Because again, there's still quite a lot of misconceptions out there, and buying your first house, it looks daunting from the outside because you just see it as one big process. That helps break it down into manageable little bites, and people might read that and think, actually, you know what, I've done the first 4 bits. I'm well on my way. So it is daunting if you don't have the right help and support.
I think what's nice as well, if you choose your mortgage advisor yourself, you're not kind of shoehorned into someone, that you kind of build that relationship up, and then, I mean, you build good relationships up with your first time buyers, and I assume you're on like property 2-3 of some of these buyers now. Like that journey obviously continues, doesn't it? So great place to go for a first time buyer, but it's not like we specialise in first time buyers, that's it. Like you've got that journey throughout as well. Yeah,
it's I think probably most brokers would feel like this is what we do is fairly transactional. You only get in touch with us kind of when you need us or when you need something. Nobody
wake up on a Friday afternoon for a chat, do you? And
nobody wakes up. It's like, you know what? I really fancy a mortgage today. It's like you don't get one unless you need
some
one.
Some people might,
yeah, some weirdos out there, but people only get in touch when they need us, and we might only speak to you every 2 or 5 years, like when you're up for renewal. But what we're trying to turn what is a transactional industry into more of a relationship industry. So we are quite heavy on social media, hence all of this stuff. But we follow majority of our clients on social media because we like to see how they progress. Like I love it when Friday is usually completion day, so you see people picking up the keys and putting a picture up.
Nice,
we've got loads of people that are refurbing houses at the moment. So I feel like I've been on that journey with them.
Do you get like the housing accounts as well? Because people make their own Instagram for like houses, don't they?
I think that's like half of our followers on Instagram, I think. I love it. And then you see people, we've got a few people now at the moment that are announcing that they're pregnant. So the house that we helped them buy is now going to become the family home, or I'm expecting a phone call shortly to say that house we bought a few years ago is now not big enough. But yeah, it's lovely. So we're trying to build that relationship by regular touch points, offering more of ourselves, signposting where we are and stuff. And we do get the flip side of it when people ring up and say, we're splitting up, what do we do? And we help with that as well.
That's cool. So we're encouraging questions on this podcast that way.
We are.
We've had our first one from Rowan. Is it Ronan, isn't it? Not Rowan, Ronan.
Ronan, yeah.
So Ronan has said, I've just had an offer accepted. What do I do now?
So Ronan was actually a client of ours that actually got in touch last week. He's a first-time buyer, and he'd put an offer in on a property, and he was like, what the hell do I do now? So when you put an offer in on a property, the estate agent is going to ask for 4 or 5 things. So they're going to ask for 2 forms of ID for anti-money laundering measures, so something with your face on it and something with your address on it. Mortgage and principal, which I'd like to think you'd have from us. proof of deposit, so that's your lifetime ISA statement or a bank statement. And then, depending on the estate agent, they'll ask for your solicitor's details as well. So either you've already found somebody by that point, we can make a recommendation, or that's usually for most people the last bit of the puzzle. Once you've given them those 5 things, they'll draft up what they call a memorandum of sale, which is just a posh word for a document with the buyer and seller's details on.
Yep.
That gets swapped over. And then after that point, they take the house off the market. That's the most important bit. So satisfy those 4 or 5 things as soon as you can. Because then as soon as that house is off the market, nobody else can come along, nobody else can view it. And then once it's off the market, that then buys you and the broker the time to sit down again, go through mortgage options, life insurance, get everything sorted, and then do it rather than rushing around worrying if someone else is going to bid on it.
Great. So I guess from a first-time buyer point of view, what they should be doing is just listen to this podcast.
Absolutely.
Getting all that information, get that booklet, either hard copy or online as well. Get it online. There's going to be a link in the show notes. For.
Yeah, we're going to send it out in the show notes. So we plaster it all over social media. On the bios of our social media pages, we've got a link tree. It's on there. It's free to download, or if you want the hard copy, if you're a bit old-fashioned, then we can get one posted out to you. But yeah, listen to this podcast and just encouraging people just to get in touch. Like we say, speaking to us is free. We're more than happy to speak to people. You don't know what you can and can't do until you do speak to us. Pick up the phone, drop us an email, drop us a message on socials, wherever you are, and we'll try and help where we can. Yeah,
and I guess just a little note for me, because obviously I was a first-time buyer at one point, and you took us through that journey, and it was an easy journey. Like, it seemed daunting at the beginning, but we had questions before we even rang you about questions. You were ringing us up and updating us on the situation and the next steps. And I think as well, like, you'd spell out the steps, but I don't know if you were conscious of doing this, but you were almost like, don't worry about the other ones ahead. The next step is, let's concentrate on that, get to that, and then we move on again. I think taking those bite-sized kind of chunks rather than like, we've got this, and then we've got this to do. It didn't seem overwhelming. It seemed like, okay, next stage, we've got this date that we need to look forward to, or we need to, submit something by this time. So, and then, it was really straightforward. Highly recommend, and I think a bit of a no-brainer for first-time buyers in the area. Coming speaking to you guys.
No, thank you. I appreciate that, and I think just going back to that point about just focusing on these next 3 things is we get people ring us up, it's like, I need to sort home insurance out. And it's like, you don't do that until you own the property. We've got to do all these things before we get to that point.
One thing you said before as well, which stuck with me, I mentioned it to this week to someone. I think it's one of the guys working with me anyway. Not to buy things on finance. So like get the offer in principle,
mortgage in principle,
and then going out and going, oh great, okay, let's buy a sofa from finance, buy a TV, because that can affect it, right? Which you told us at the beginning, and that was like a good thing for us to be like, okay, actually let's hold back because this could affect the mortgage down the line. And I was telling all the guys here, and they were a bit shocked at that, like, oh yeah, okay, that's. It was Lewis anyway. Because I'm speaking to you. Looking at buying his first home as well.
It is funny because as soon as people get the mortgage approved, they think, well, that's it. That's set in stone now. The first thing you do, everybody does it. Like, if you say that you don't do it, you're lying. Is once your mortgage is approved, especially as a first-time buyer, should we go to IKEA?
Yeah.
That's the first thing you do.
So you get excited and you think, I want to kit out my house, and I've got these all these ideas, and we just want to
and that's what people do. It's like I've got clients as well who have reserved like a new build but haven't bought it yet, and they put a post up the other day. They've gone around Currys and started reserving all this furniture, and I was like, just reserve it, don't put it on credit, because what lenders will do is they'll make an offer like today. If you're approved today, they've made an offer to lend to you based on what your situation is today. That's based on your income, what credit agreements you've got, and things like that. Is then when you come to completion and they come to release the money, they do one last credit check. So if they look at you today,
that's drastically changed.
And you've only got like a £500 credit card. Okay, we're happy with a £500 credit card, but we didn't know about these £4,000 in loans that you've got because you've bought a sofa, TV, dishwasher, everything. That's why it becomes a risk. So we then get people as well, it's like, oh, well, now that I've got the house, I want to get a car as well. It's like, please, just for the love of God, like, if you complete on a Friday, go to Mercedes on the Monday. Like, once you've got the mortgage, you can do what you want. But in the run-up, just...
And I guess just speak to you as well, because there might be some situations where, okay, you can get that, but it's by speaking to you to know those limits and know what's right and what's wrong and ways to do it. Like you say, reserving things rather than putting on credit.
Yeah, because I think what catches some people out is the buying a house at the time as the current car finance comes to an end.
Okay.
So it's like I've got the balloon payment. It's like, what do I do? It's like, do I get a loan to pay it? Do I swap it for something else? And it's like, if you're going to swap it for something else, if it's kind of like for like, better or worse off. So if the monthly payments are the same, yeah, go for it. But if you go in from like a Ford Fiesta that you earned outright to then £400 a month on a Mercedes PCP, that's a little bit different.
Yeah.
So yeah, it's just we're kind of there to coach people as well. It's like, I know you've got the mortgage, and I don't want to be I don't want to be all doom and gloom, but just sit tight. Like, wait until you move in, then you can do whatever you like.
Good.
But yeah, we love working with first time buyers. It's, again, I love having these conversations because you're taking somebody from their mum's box room at home to then buying their own place, or we've got a social media post coming out soon saying like green and green, helping you out your mum's box room since 2020. It's like a new strapline.
It'll resonate with quite a few people.
yeah. It's like if you're sick of living at home with your mum and dad and your younger brother, it's like we can get you out. Or you get like young couples that are getting serious and they want their own place and their own space. And
how's the climate these days though? Like a lot of people are living way into the 30s before moving out, which 10, 15 years ago was a bit of a different story, but it's the situation we're in. So yeah, there's going to be a lot of people in that situation, and I can totally understand first time buyers, that average age is increasing. So
definitely, and I mean, I look at some people that buy on their own for the first time, and I'm like, hats off to you. Like, that's a big commitment. Not having somebody else's like income to fall back onto, or having two lots of income to pay for everything. So like, fair play to those that do it on their own. I mean, when me and my wife Beth moved out when we were like 23, there's no way I'd have been able to move out on my own. I'd have had the house, I'd have been able to pay the bills, but I wouldn't have been able to leave the house because I'd have had no money left for anything else.
Yeah, no point.
So yeah, we do tend to see first time buyers are couples because they're pooling resources, and usually one of the couple wants to move out before the other, and the other one kind of goes along with it. But yeah, moving out on your own is hard. So fair play to anyone that is doing it on their own.
Yeah, fair play. Cool. Right, plenty of good advice there. Loads of little tips. I'm sure people will find a lot of that very useful. And I think moral of the story, just get in touch.
Yeah, it's just a phone call. It's a cup of coffee. That's all it is. So yeah, if anyone's got a question for next week's episode, whether you think it's a stupid question or not, probably not. We've probably been asked it already. So anyone that's got a question that they want answering on next month's episode, please just get in touch. Phone call, email, socials, wherever you can find us.